The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 9th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, the day after Masters Tournament. It's Monday. Welcome to the show. I'm Steve Rhodes. Of course, this is Tiger Financial News Network. Right now, we got the Dow up 407 points. She's trading out at 24,340. S&P's up 46 points, 2650. NASDAQ 100 up 2.5%, 162 points. Russell up 17. You've got the semis up 3%. That's 42 points to the upside. So we've got some markets moving to the upside. We'll go figure out what they have to do next in order to continue that move. Spot volatility index off a buck. That's down 5%. Gold's up 330. Silver up 15 pennies. If we take a look at what's moving to the upside dollar-wise, 94 bucks, 81%. Well, I don't know what this is, a Vexus Inc. Let's take a look at Booking Holdings Inc. That's up 49 bucks, 2.5%. Google's up $34. Amazon 27. Sage Therapeutics up 11% or $16. To the downside, Menlo Therapeutics up 25 bucks, 71%. That's a stinger. You've got Essent Group Limited, Essent, ESNT, down 16% or $6 and change. Acadia Pharmaceuticals off $5. China Internet something or other, CIFS, down 16%. Of course, I want to look at what you want to look at. We do have some requests that have come in through the Tiger's Den, a couple emails. So let's just first start off with the Dow right now. It's up 401 points out there. Any big deal? The answer is no. Still within just the average true range of price movement out here. In fact, we're probably, if we take a look at Friday's close, so Friday's close was 23,932. Just to do the math on this, let me see, what did I say? I probably should have done this beforehand, but I wasn't really paying attention. 23932. Right now we're 24335. So if I just take a look at the difference between these two, just curious if it's 500 points. No, that's only 403. That doesn't even make sense. Here's the deal. Maybe my math is just a bit off. But the average true range on the Dow, I probably typed in the wrong number. Close 23,932. No, I did that. The average true range on the Dow is 519 points. I mean, just on an average daily basis, it moves 500 points. We're at 406 to the upside as we speak right now. I guess that does make sense. So it says, hey, it could easily have the Dow go up another 100 points or so, and it would still be no big deal. It's just the norm, the new normal out here. Now, in order for that to take, and if it does take place, if in fact the Dow just decides to do its average thing out here, if we take a look at the Dow Equity Futures contract, we can see that it's still trading inside this descending price channel, which really means in order to go ahead and get our skirt into a tizzy out here, you need to really see price get above the high from 2 trading sessions ago, April the 5th. If you close above that high, we'll try this. Let's see if we can give you an exact figure out here. That would be 24,596. Yeah, 24,596. Then there's more upside potential. Now, more upside potential could be all the way back to the February 27th level. February 27th, by the way, the high out there was in the 25,837 area. Are we there yet? No. What's today's move? Nothing more than just less than average as we speak right now. If we go take a look at what really needs to happen in order for these markets to move to the upside, well, let's start off with, just for newsletter subscribers, let me update you on this morning's chart. And when we take a look at this morning's chart, let me do this here. Let me pull this over. It was a combination of things, but it was a 120-minute time frame chart. We said inside the newsletter that we looked like the markets were trying to form some type of bottom. Number of reasons out here. But on the NQ, and you and I for the last many days has said to each other that this market is really going to be all about the NQ. That's where our eyes and ears and nose and toes need to be looking out here. And what we can see on this 2-hour time frame chart, classic bottom type pattern and signal. Price moving lower, doing less relative energy. Cavalry runs in, creates that three-river morning star pattern out there, makes its first move up, gets into that TD setup. You got to like that. That's what formed the top. Let me get a cursor going out here. That was right here at about 4 o'clock in the morning. That was on the trading day of April the 5th is what it looks like to me. That's what we're going to go with, April the 5th. Goes ahead and makes a retracement. Yes, a retracement out here. In fact, it makes an A to B equals CD to the downside. More so than that, well, part of a Gartley buy pattern is that you make an A to B equals CD. This is what it looks like. We start from the bottom of our morning star pattern. Now it's about 8 o'clock on April the 4th. We go up that TD setup 9 count. We come down to the first retracement. That's at about 2,200 hours. That is on April the 5th. We then go up, makes a nice little retracement here, about 0.618, slightly more than that. And then it makes the complete A to B equals CD to the downside. Now, that alone is not the signal that says, okay, the Gartley buy pattern is in. Instead, what you and I need to do is just make sure that we can understand the smoke signals that the market generates for us. And it does that by drinking a bunch of sake. That's right. And while it's drinking a bunch of sake, it creates those Japanese candlesticks. It's painting them out there. And we saw that take place, believe it or not, while everybody was snoozing on Friday as the equity futures contract came to a close. A nice little piercing candle. That alone was not enough to say, okay, let me go ahead and pile on in and take a short-term long position in the NQ. Instead, what you did was you just simply waited for Sunday's open. And when the market opened on Sunday, you got your next signal. You got a small little gap to the upside. Gaps are your friends. Don't let anybody tell you any differently. Whether you're a bull or a bear, this is how the market communicates to you and I. Gaps the upside, confirms that piercing candle. And now what we have going on is a move back to the recent highs. That may be where price stops. If price doesn't stop here, and we'll take a look at what it needs to do to communicate to you and I next that you're going to see this rally. When I say rally, let's keep this in perspective because of the average true range inside these markets. But for a continued bounce or move higher, what it needs to do. We'll finish off by taking a look at what a Gartley pattern can turn into. See Rhodes, TFNN.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go ahead and complete our thought on the 2-hour chart here for the NQ. And any Gartley pattern, in this case here was a Gartley buy pattern that formed to confirm last night when the market opened up. You've got 5 potential different outcomes. Now, 4 of those outcomes have already been attained inside of this 120-minute time frame chart. Outcome number 1, 0.382 retracement. Number 2, 0.618 retracement. That would be of the A to D leg. If I go ahead and I erase the Gartley pattern out here, I can just draw in the A to B equals CD to the downside, so you'll see that very clearly. So this is, when you take a look at this A to B equals CD pattern, it would be the 0.382 of the high, where we start that A to B equals CD pattern, and then the low, where the D point comes in. So 382, 618, 786. The fourth move is a 100% move of a move. Well, that in essence has been accomplished because the swing point for that, or the A point of the Gartley pattern of the A to B equals CD, took place at 4 o'clock in the morning. That was on April the 5th. And price has gotten back into that area. So it is success. Doesn't mean it can't go test the high out there, which it most certainly can. It's accomplished outcome number 4. Now, we can see here, just by taking a look at the Japanese candlesticks, we can see where the sellers have been lined up recently on a 2-hour time frame inside the NQ. You've got a nice little shooting star, the opposite of a hammer candle, back here at about 4 o'clock in the afternoon on March the 29th. You can see that as price recently got up there, this is back at about 6 o'clock in the morning, back at about 10 o'clock in the morning, back in April 5th, we can see that it formed some bearish reversal signals at the same price area. So the traders can't hide. They can hide if you don't know their signals. But we know that price is up around a level of what we'll call significant resistance. Significant because we know that there are sellers here. So if price can take out those highs, and by those highs I would use the high of that shooting star, and that is going to be 66.5375. We're not there yet. And if you close above that, then that says outcome number 5 is underway. Outcome number 5 is that your Gartley turns into an A to B equals CD. In this case here, to the up. Whoops. Give me a second here to actually draw this in here. So your A to B equals CD pattern, which then could set up a Gartley cell as well, would give you 67, 56, 25. That would be your 1-to-1 pattern out here. There's no reason for it to have to stop there. It can go on to 68.50, 69.71, 71.04. Could do any of these A to B equals CD patterns. We just simply have to take a look at what is going on as those price areas are attained. Now, the difference here is that if, in fact, the NQ continues to move higher, what it will also do, and this will be the first time in quite some time inside the NQ, you would see a close above Stevie's red line. So this is the daily time frame chart. This is how we put together a 2-hour time frame chart that showed a nice little bottoming signal out there, and with the patterns that you like to trade, with the patterns that I like to trade, and then we put that in conjunction. Does that sound right? In conjunction with what the daily time frame charts are doing. So for those of you that are bulls, short-term bulls, what you need to, or long, I don't care what kind of bull you are, you've got to see price close over Stevie's red line on a daily time frame. Now, that red line is underneath where that shooting star was on the 2-hour chart. So you've got to give it a little bit of room out here. But a close above Stevie's red line, well, that's something we haven't seen since the trading session of March the 15th. I'm not saying it's going back to March the 15th. That's how long it's been since we've seen that. And a close above that says, okay, game is on for a further bounce or potential bottom that would have formed inside the market. So to me, it's all about the NQ. We can take a look at all, because if the NQ gets its mojo back, I don't care what resistance levels we can find inside the ES or what resistance levels we can find inside the YM or the Dow out there. It just simply will go ahead and lift all boats higher. Has it proven itself to you as we speak at 122? The answer is no way, Jose. Now, we had a question come in. We've had several, but let's go to this one here. This was sent by email, and this was Tom letting his fingers do the walking. He says, good afternoon, Steve. I say good afternoon, Tom. Tom says, I entered a long position on the JNUG and the Nugget this morning. I'm wondering what your thoughts are on gold and the GDX, GDXJ, so on and so forth. I know gold is predicted as to where the euro heads. I'm interested in what you think about this. So with regard to taking that trade, a couple of things. First, you're in the GDXJ. No, you're JNUG. So if we take a look at the JNUG, you must be in this. I'm thinking you must be in this. Well, I know to win it. But I think you must be in this because you believe this is a longer-term bottom. Am I right, Tom? And if you say no, I'd say then don't put your money in the JNUG. Why? Because the average daily movement here is 78 cents. I'd rather see you know, I kind of think I have a feel for the type of trades you like to see out here. So just the average daily movement inside the J Nugget out here, it's hardly anything. It's probably not worth the risk when you take a look at this just sideways-ish type action out here. That would be my first thoughts with regard to being in the junior nugget out here. But if you're in it to win it because you think it's a bottom, well, then you're absolutely right. What you need to see is you need to, and you may be right about this. Look, I believe that you're right with regard to what gold wants to do. It's just hard to really go ahead and put your money to work inside these mining equities right now. The reason why I think it's a long-term thing to do is because the last 3 of 5 and now maybe 4 of 6 interest rate hikes in the Fed funds rate by the Federal Reserve have been nice bottoms. The last one was on March 20th. That so far has been the low that we've seen in gold. It continues to make higher lows, but we haven't really gotten much above the lower highs. So we're really inside this little trading range out there. You mentioned gold priced in euros, and yeah, until gold gets over 1107.70 out here, you're sort of got dead money going on. That's what it looks like to me. Now, gold, if you were trading gold, Tom, that would be a different story. The reason why I say that would be a different story is because on Friday would have been your signal to go ahead and take a trade inside of the gold futures contract. And if I can find that chart, It seems like it should be right here, but for some, there we go. There we go. Well, this is taking a look at soybeans out there. Hey, that's another story. But let's go take a look at gold for you, because I want to answer that question. Why was Friday an important potential buy for you? It's because it doesn't get any easier than this. I don't make this stuff up. But your TAS market profile, my TAS market profile, the bottom of that box was 1322.40. The low on Friday was 1322.60. Yeah, you didn't have to put a whole lot in there. I know there's some denners that went ahead and have taken, shorter-term long positions inside Goldilocks. And for futures traders, it didn't get any easier than that because the risk-reward was there. So what are my thoughts? I believe gold is really trying to form that next longer-term bottom out here. If that's why you're inside those mining equities, then God bless you and best of luck. We're really in a market that is just churning sideways, kind of deadish money out there at the moment. But a breakout could take place at any point in time, at least with regard to your position. Goldilocks held a key level of support, and that was at that 1322.40, even though it missed it by 20 cents. A $1,300 instrument, missing it by 20 cents? You got to love it. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Excuse me. Welcome back, folks. How about that? How about that Masters tournament yesterday? How about Patrick Reed? You know, what a fighter. You knew that he was that type of fighter. If you watch the Ryder Cup out there, you know, just really great to see him play the way that he did. And then how about Jordan Spieth out there? How about shooting the round that he did to try to put some pressure on his good buddy, his partner at the different match play tournaments out there. So some great golf. I thought it was some great golf out there, and congrats to all the players and certainly to Patrick Reed out there. So we did have some questions that came inside the Tigers Den. I want to go ahead and look at those right now. And the question was, let me see here. If the Dow Jones has bottomed on April 2nd with another leg higher to new highs getting underway, do any of these names look like winners to you? So we don't know whether that conclusion is correct, but instead we can go look at a couple of these stocks and say, you know, are these what do these stocks look like? Like American Airlines, AAL is the first ticker symbol that we'll take a look at. So in American Airlines, and this chart here, this takes a look at what American Airlines is doing in respect to its market profiles, daily, weekly, monthly, daily on the left, weekly in the center, and monthly on the right-hand side. And what we can see here is that prices inside the monthly TAS market profile. Says resistance 55.79, support 44.25. Says it's trading in this range. Kind of an equally distributed monthly profile. So it doesn't say the bulls or bears have an upper hand here. The same really inside of the weekly chart for American Airlines. Says price came down to support 50.18 on a closing basis. This has held the last now 3 weeks. We're into, let's say, week number 3. Looks like this should hold. Looks like price should bounce to at least 52.16, maybe 54.13. And the daily, where price did close below the bottom on Friday, it's struggling to get back inside of that box. Now that is a bullish profiled box, the bottom of which is 50.61. You're at 50.64. If price can manage to stay inside here, if the Dow has formed some type of bottom or there's more bounce, and price really ought to be able to make its way up to 53.44 out there. That's what it looks like when I take a look at American Airlines. If I go take a look at its horizontal trading ranges out here, see if there's anything that pops up on my screen. Really the monthly of 50.69, as long as that holds, then price ought to move to higher price. And I would use the projection that the profiles gave to us. So that was one stock with regard to, you know, what is it that we see out there. That was using that set of tools. Let's take the next stock out here. The next stock was Delta Airlines. So this is about the airlines out here. So we'll take a look at Delta. Let's do that on this chart here. So let's put in Delta. This is a daily time frame chart. Let's go see what patterns, if anything, we have here. And in the case of Delta right now, in order for this to look good to you and I, you need to see price close over Stevie's red line. That is 54.02. You're at 53.58 as we speak right now. What I'd really say is price really needs to go ahead and close over. Let me get this crosshair out here. The trading session, the high from April 3rd, in order to get any kind of mojo going inside of it. Delta Airlines is going to have some real resistance when it gapped down on January 25th, and that's in the $57 area. So you'd really have to do a nice little price reward scenario to see if you know, if that's worth the trade or investment at this stage. So at this stage, Delta Airlines could continue to move to the downside. I would take that call off if we see it close above Stevie's red line at 54.03. The next stock out here, well, that was United. Let's try, and you got all of them out here. Let's try JetBlue, JBLU. Let's go see what that is, because I don't recall looking at that stock. Maybe they're all doing the same thing, and voila, they are. When we take a look at JetBlue, let's go take a look at what the patterns are on this time frame. You did have at the high, you had a nice little TD setup 9 count. That was on March the 17th. You then had a gap down below Stevie's red line on March 22nd. At this stage, if I just do some wave counts to the downside out here, let's see where we're at in that scenario. Only wave letter number 3, letter C. Let's go see what JetBlue is doing volume-wise as it approaches its swing point. So JBLU is the ticker symbol. We're going to see what kind of volume this is. This has while it's pushing into lower price. And by that, we're going to take a look at the trading sessions, 2 of them, April 2nd, 4 million shares, was 4.1. You're pushing lower today with 4.5. That is not what you want to see. That would suggest lower price. If we take a look at the volume from February 9th, that had 5.8. If we're at 4.5 right now, it looks to me like also maybe lower price. It looks to me like JetBlue probably headed to 1923 to test that swing low of February 9th out here. And that's what I would wait to see how that test unfolds before pulling the old trigger out there. So at the airlines, we took a look at what? Delta, JetBlue, and I believe it might have been American Airlines or United. So let's go out to Ron in Denver. Ron is calling. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. I bought some calls late Friday afternoon on IWM.
Okay.
It's up a couple bucks today, and I just wondered what numbers do I need to watch to say where you take profits, or if it's breaking out, you kind of wait a few days? Or any thoughts?
Sure. So let's take a look at. So the IWM itself has a average price movement of about $3. The IWM is up $2 as we speak right now. So a little underperformance average-wise with regard to its normal movement out here. If we take a look at a number specifically in the IWM that you want to see today to hang on to this, you'd like to see this close above 152.02 as we speak right now. As far as where would price head from there, good question. Let's go see what it's doing volume-wise today as this is trying to push higher. And, Ron, what I'm going to look at is I'm going to look at just simply the trading session from 2 days ago, April the 5th. And as the IWM was pushing higher, it was doing it with 17 million shares. Today, you're pushing into that level with 8.6 million shares. So it's not exactly the type of volume push that you'd like to see coming into a prior swing point where there was resistance. And that resistance may be established by these downdraft days of March 23rd with 35 million, maybe March 27th with 32 million shares. So the IWM is going to need a bunch of help out here. If I take a look at what's going on a short-term basis inside of the Russell 2000 equity futures contract and look for help, I don't see it other than to say you'd like to see the Russell 2000 equity futures contract stay above 1529. That would be a level that I would be looking for in the futures contract on a 240-minute basis. Is there any help out here? There's not really any help at the moment. So that's what I see. So in summary, the Russell 2000 is pushing higher, but doing it with really light volume. Does not mean that it can't move higher. It's just not, you're asking in essence about over the next couple of days out here. Did I hear you correctly?
Yes, that's right.
Yeah, so
that's what I was looking for, yeah.
Yeah, so if that's the case and, you've made some money on it, probably not a bad idea to take your profits.
Okay. Appreciate that.
You bet. That was Ron. You bet. My pleasure. That was Ron in Denver. The only reason why we suggested that, hey, it's got a nice profit. Maybe the IWM is going to continue to move higher, but it's pushing that April 5th swing point with mighty light volume, about 50% of it as we speak right now. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Eddie wrote in, and it really is kind of some additional follow-up for Ron's question on the IWM. But Eddie wrote in, and he was asking if we could, if I could give him my my resistance levels inside of the NQ. Now, Eddie, what I don't know, as it pertains to you, based on the email that you sent me versus Ron. Ron was very specific, and he's holding some call options. This was just a very short-term trade, and so he was asking me for what is it that I see right now as of 142. You may be on, I believe you are, on a different time frame with regard to what it is you're looking at doing. So you gotta, you know, so just so take what, if that's the case, if that is in fact the case out there, don't take my suggestion or interpretation for Ron to be the same interpretation or suggestion to you. But if I just take a look at the Qs out here as an example, the last time the price was up into this area was back on April the 5th. 43 million shares were posted at the end of that trading day. Today you're 25. So again, moving higher, doing with some light volume out there. So that'd be one of the things to take a look at. With regard to the NQ specifically, and I think it's really important, it is Stevie's red line, which we talked about. We haven't seen a closing above that since March the 15th. That number reading as we speak right now is about 65.97. Now, you wanted to know what that number was. What I do is I go from here and then I go take a look at the market profiles just to get a feel for maybe some, because we use that as a guideline. We don't have to use that as a, because price can go higher. You're just looking for the close. And if I take a look at the market profiles for 30, 120, 240, the daily are kind of, you know, are not the ones I'm looking at this stage, nor am I looking at the weekly. So on the 240-minute time frame chart, the price that you would like to see price close above, and Ron, this kind of goes for you too, because I did say that, look, if the NQ is able to break out above resistance, it ought to go ahead and move things higher. So just kind of, you know, we don't know that yet at 1:44 in the afternoon. Probably by 3:45, 2 hours from now, you might have a pretty good feel if some resistance levels are breaking, if price is going to close above Stevie's red line. The number inside the 240-minute chart for the NQ is 66.20. And then if I take a look at the 2-hour chart, it's 66.45. I would say if you were to see price close over 66.45, you've got a breakout underway, and you've got an A to B equals CD to the upside inside of the NQ. And then Ron, that ought to go ahead and take your IWM calls up higher as well. So I think I don't see where things are falling apart just yet. And so you go ahead and, you're already in, you manage your trade that way. Again, I think it really boils down to the NQ. Again, if the NQ is able to take out resistance levels, then it should be able to power the rest of the markets higher. Now, the interesting thing at 1:45 in the afternoon, if we take a look at market breadth, for that same 4-hour time frame chart, is we're seeing a bullish crossover. 28 issues of the NDX 108 are trading above the top of their box and 18 below. So you have, on the 60-minute time frame chart, you had a crossover. If we just take a look at this, you had a crossover at about bullish crossover April the 9th at 3 a.m. So the bullish crossover, that still is in effect. We're now looking at a potential crossover on the 4-hour time frame chart. I don't know that this 4-hour time frame chart probably doesn't close its lid, so to speak, until about 4 o'clock out there. But you are seeing signs that it does want to break out. The question is, can it take out the resistance level of those market profiles and do it before 4 o'clock to give both of you guys some important information about what the next move would be inside of the NASDAQ out there. If it doesn't give it to you before 4 o'clock, well, it might come at 7 or 8 or 9, I don't know. But Ron's a whole different scenario out there, very short term with regard to the trade that he's in inside the Russell 2000. So, Eddie, I hope that helps you out. Ron, I hope that helps you out as well. Let's check here real quickly. I don't think I have any more requests inside of the den. So if you've got something you'd like me to look at, I've got 4 minutes left in this session, and I think about another couple out there. Please go ahead and put those in. Just taking a quick peek here at emails, and I do see another one. So this one, let's see. So this is from Audie. Okay, so I still have many problems dealing with details in all forms, like wish you had a scale down. So this is not really so much a question, more of a personal question, I think. And so I will go ahead and respond to that versus something specifically to take a look at. So let me come back here and see what's moving out there. Again, if you have any questions, just either give me a call, send me an email, punch something into the Tiger's Den, punch me in the face. It doesn't matter out there. I can survive anything. So let's see, what else do we want to look at? You know what we should do? We should probably take a look at some of the sectors inside the S&P 500. Let's do that. Let's go take a look at the technology sector, the XLK, get a feel for what it's doing. Because the XLK's got that very bearish island top reversal pattern at all-time highs out there. That's from the trading sessions between March 9th and March 16th. That is your island top that is out there. Today, this is pushing into that same type of swing point, April 5th, that had 16 million shares with 5 million. So we're seeing the same thing across the board. Doesn't mean that it can't move higher. Inside of the XLK, we gave you a number like we did inside the IWM. Right now it's 152.03. Inside XLK, the number is going to be 65.43. Or is it 65.49? So 65.49, closing above that. So this is kind of interesting here. And this, maybe you put this together, guys, with your questions, your trades, IWM related, Qs related out here. The XLK, number one weighted sector inside the S&P 500. If it can close above Stevie's red line, we haven't seen that since March 16th out here, that would give you some hope for some higher prices. It's a subtle hope, but nonetheless, it's so subtle you won't get anywhere else other than right here at the between the 1 and 2 o'clock time frame, because nobody else uses Stevie. Well, there's plenty of subscribers that are using Stevie's red line out there. 65.49. And speaking of subscribers, I'm doing a workshop this coming Wednesday from 5 to 6 for subscribers out there. We're going to really make sure that everyone knows exactly and has the exact formula on what to look for the pattern that is present before every bear market for the last 130 years. Hey, let's go to Garo. Garo, thanks for calling. Thanks for holding. How are you today? How was your weekend?
Good. How about you, sir?
My weekend was great. One of my favorite weekends is Masters weekend. Are you a golfer at all, or an ex-golfer?
No, sir. I don't like golf.
You don't like golf? Well, then you didn't like this weekend. as far as TV was concerned.
I don't like boring sports like golf or stuff like that.
I understand. I get. I did not think that I would ever like the game of golf until a friend of mine invited me. He was a good golfer. He took me out there. This is many years ago, and I walked off the course with more money in my pocket than I arrived. That was a pretty good thing. It was a Sunday. It was during NFL season, and we came in after a game of golf and watched football and drank a few beers. And I said, there might be something to this game. Garo, when we get back, we'll go take a look at what you want to look at. Can you tell me what that might be?
A MasterCard, a Visa and MasterCard. Both of them are very similar to each other.
Perfect. We'll take a look at MasterCard with Garo from Newport Beach, California when we get back from this break.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Right over to Garo. Garo, we've got about 2 minutes, 2.5 minutes. So tell me how I can assist you with what you're looking at in MasterCard.
I think that both of them, Visa MasterCard, is at their swing point. 3 days ago, it hit the upper dot, and the dot moved down.
Yes.
This was 176.87. But then it opened very low. I think this is the bottom that is building the bottom of the cup.
Yes.
And in no time, if that 5-day crosses the 50-day, then it will be a bull. What's your idea?
So, yes, I would agree with you that it looks to me like MasterCard is also forming a bottom. And the reason that I would conclude that is that on February 6th, that is its swing point that is of significance. There were 7.2 million shares there. The top of that is 169.36. And the first test of that was with 5 million shares, so light volume. That was on the trading session of March 28th. Tested again with 4 million shares April 2nd. Tested again on April 4th with 4.6 million shares. Tested on Friday with 5 million shares. So it doesn't look like there are a lot of sellers. There's certainly not sellers that are ramping up beyond the February 6th swing point low. That being said, if you use your so you've already gotten your signal on a daily basis, and then normally I would think that you would be down on your 15-minute chart out there, and you had that crossover, looks like maybe at about 10:30 this morning. Did you take any action? Did you take any action this morning?
No, not today. Today I bought ConocoPhillips. That's where I bought at 30 minutes.
Okay.
Yeah, 76 Union at 30. That's where I bought it. Yeah.
Yeah. So I see what you're seeing, too, with regard to the daily time frame for MasterCard. It was pushing lower with light volume. That's what you like to see out there. And I wish we had more time. It's always great to hear your voice. You know what? I bet you would be an amazing golfer, because the way you do anything in life is the way you do everything. You're a great trader. You'd be great at anything that you do. Hey, thanks for calling, Garo. Have a great day. Folks, stay tuned. Stay tuned. Your favorite polar bear of mine, David White. He's up next. I'll see you back tomorrow on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter